Welcome back to ACCT 423. Our topic this week is on operating accounts for state and local governments. Topic 2, Chapter 3 of your textbook. Before we go into the learning objectives, I'd like to point you to what the Bible says about paying taxes, because you would notice that among government bodies, the major source of income is tax. The leaders at that time, the Pharisees and Herodians, would like to test Jesus, and so they ask him, "Teacher, is it lawful to pay taxes or not?" This is recorded in Mark chapter 12, and Jesus' response is in verse 17. Jesus said to them, "Render to Caesar the things that are Caesar's, and to God the things that are God's." Jesus wants us to be law-abiding citizens. And this is reaffirmed in Romans 13 verse 7 by the Apostle Paul. He said, "Pay to all what is owed to them. Taxes to whom taxes are owed, revenue to whom revenue is owed, respect to whom respect is owed, honor to whom honor is owed." Let us pray. Father in heaven, as we start this class, once again, we want to surrender ourselves to you. Grant us your wisdom and help us to understand the topics we are covering. More importantly, fill us with the Holy Spirit and help us to be honest, diligent, and law-abiding citizens just like Jesus. Father, enable us to follow Jesus' example. In Jesus' name we pray. Amen. Our learning objectives for this topic are fivefold. Learning objective 1 is about how operating revenues and expenses are reported in government-wide statement of activities. You will recall that the minimum requirements for general purpose external financial reporting includes an MD&A, Management Discussion and Analysis, which has two major components, the government-wide financial statements and the fund financial statements. So, learning objective 1 pertains to the government-wide financial statement. All right? So, learning objective 1 for government-wide financial statements, whereas the other 4 learning objectives, from learning objective 2 to learning objective 5, it will actually pertain to fund financial statements, in particular government fund. All right, so in learning objective 2, we'll distinguish between revenue and other financing sources, as well as between expenditures and other financing uses in governmental funds. We'll also discuss in Learning Objective 3 budgetary reporting. In Learning Objective 4, we'll understand how budgetary accounting enhances budgetary control over expenditures and revenues. Then we will pause there for the first part of this lecture, and then we'll return for Part B in Learning Objective 5, where we will discuss the classification of revenues and expenditures, and we'll learn the journal entries to record and close the budget. All right, so just remember that among the two categories of government financial statements, the first learning objective talks about government-wide financial statements. All right, so let's go further into the first learning objective. When we're talking about government-wide classification and reporting of expenses and revenues, you will find that we need to know the different functions or programs reported by the governmental activities, because they will be displayed differently or at the top of the statement of activities. The format for reporting will be expenses minus program revenues equals net expense or net revenue. If the expenses are greater than the program revenues, then it will have a net expense and it will be in brackets, just like what you've learned in financial accounting. When it's net loss, it is in bracket. So when it's net expense, it is in bracket. If it is net revenue, it will not be in bracket. Functions and programs represent major activities or services of the government. So where are these functions and programs shown in the statement of activities? Right there. All right. Each and every function, so function or program 1, 2, 3, 4, and 5 will be itemized. And the difference between functions and programs is such that when we're talking about functions, they are group-related activities aimed at accomplishing a major service provided by the government. So an example would be public safety. That's a major service or a regulatory responsibility of the government. A program, on the other hand, may be a group of activities, operations, or organizational units that are directed to the attainment of a specific purpose. So it could be highway beautification or park improvement, that sort of thing. Now let's look at direct versus indirect expenses, because that's the first item that is shown, expenses minus program revenues. So direct expenses are those that are reported on the line for specific function or program. You'll notice that for program 1, the direct expenses are going to be shown directly to each and every function or program. On the other hand, indirect expense such as interest on long-term debt that might have been shared by program 1, 2, 3, 4, or 5 will be shown as a separate line item, as you can see here. All right, they are not allocated to any function or program. All right, what about program and general revenues? Well, the program revenues, as you can see here, are reported in the functions and programs section of the statement. So these are the program revenues, whereas general revenues are reported in a separate section at the bottom portion of the statement. Program revenues, just to recap, are reported separately from general revenues in the government-wide operating statement. Separate reporting allows statement users to evaluate whether the functions or programs are self-sufficient or they might require general revenue to cover net debts. Okay, now looking at program revenue categories, you will notice that there are 3 main categories there. Charges for services pertain to those charges to customers or other governmental business type, or even for fines, forfeits, licenses, and permits. All right. Operating grants and contributions, on the other hand, are donations made by another government body or an individual, and it is restricted for operating purposes only. Capital grants and contributions are donations that are restricted for capital acquisitions, again by the donating body, whether it's the government or another organization or individual. So if another government body donated, for example, fund that is to be used for building bridge, that would be considered a capital grant. Okay. Now let's look at this bottom portion of the statement of activities. You will notice specific items such as special items. These are items within management control that may be either unusual in nature or it doesn't occur frequently. All right, so they're either infrequent or unusual, and it has to be within management control. So for example, the gain or loss on sale of governmental land is an example of a special item. It is unusual and it will not be occurring frequently. The government will not always sell governmental land because they are not in the business of buying and selling land. All right. However, it is within the management control to either sell or keep the land. All right. Extraordinary items, on the other hand, are items or events that are both unusual and infrequent. So an example here is the loss due to volcanic eruption. Notice that volcanic eruption is beyond the control of the management. They can't actually decide when the volcano will erupt. All right. Another item here is the transfers. All right. Transfers, internal activity. So transfers between governmental activities and business type activities are also shown at the bottom of the statement of activities. Okay, let's move on now to learning objective 2. We're going to distinguish between revenues and other financing sources, as well as between expenditures and other financing uses in governmental funds. So here we need to look at the structure and the characteristics of governmental funds. You will recall that there are 5 types of funds that we have looked at in topic 1. So we have the general fund, special revenue funds, debt service funds, capital project funds, and the permanent funds or endowment funds. This chapter will be looking more at general fund and special revenue funds. So the primary governmental fund is the general fund. This is where all the unassigned funds will be located. The general fund is the accounting entity of a state or local government which accounts for current financial resources raised and expended for the core government services provided to the general public or to their citizenry. Special revenue funds are also governmental funds. Now, special revenue funds are created when the revenue source restricts the use of the revenue, and that restriction is imposed by the donor or the grantor. All right. Or it could be a tax or other revenue source that is authorized by a legislative body for a specified purpose only. So special revenue fund help demonstrate that all revenue from the restricted source was used for that specific purpose only. So if the special revenue fund is for library creation or library maintenance, then it has to be used for that specific purpose only. Okay. How does a governmental fund balance sheet looks like? Well, it looks just like any other balance sheet. We'll start with current assets and any deferred outflow of resources minus current liabilities plus deferred inflows of resources, and it should equal fund balances, or assets is equal to current liabilities plus the fund balance. What about governmental operating statement accounts? Well, it will have the revenues, it will have the expenditures instead of just expenses, and it will also have other financing sources. Now, revenues is similar to the revenues that we understand. Other financing sources may include transfers into a fund and the proceeds of debt issues. So if the government borrowed long-term debt, and sales of general government assets. So those are other financing sources. Expenditures will be the cost to purchase a good or service, and other financing uses will include transfers of financial resources from one fund to another fund. So as shown in illustration 3-2, here is the format of governmental fund statement of revenues, expenditures, and changes in fund balances. So as you can see here, the revenues are shown first, all right? Revenues in the form of property taxes, other taxes, fines, forfeitures, licenses, and the like. Other financing sources are shown here at the bottom after the expenditures, all right? The expenditures are shown after your revenues, and that might be expenditures for general government, public safety, health and welfare, and any other functions that they might have. Now, other financing uses will also be shown under the category of other financing, all right? So it can be either other financing sources, or if it's other financing uses, it will be in bracket because it is a reduction, all right? And finally, you will see here, once you got the net changes in fund balances, you add the fund balance beginning to reach the fund balances ending. All right, let's move on to learning objective 3. We are going to discuss here the budgetary reporting and explain how budgetary and operating accounts are classified in governmental funds. So, unlike for-profit organizations, budgets in governmental fund are actually legally binding upon government administrators. So, budgets are legally binding. As a result of that, budgetary accounts are integrated into the general ledger of the general fund, special revenue funds, and any other funds as required by statutory laws. All right. So each operating account has a corresponding budgetary account. So you will see in illustration 3-3 here a comparison of the balance sheet, operating statement, and budgetary accounts. All right. So your balance sheet will be up here, right? Assets equals liabilities plus fund balance. So your assets are similar to what you know. It could be cash, receivables, investments, and the like. Liabilities would be your account payables, accrued liabilities, and your fund balance should be equal to the net of your assets, right? So if you deduct assets minus liabilities equals your fund balance. And remember, in topic 1, we discussed that fund balance accounts could be either non-spendable, restricted, committed, assigned, or unassigned. The unassigned fund balance will be the one that is shown in your general fund. All right. Now, let's look at the operating statement. Now, we know that the operating statements would have your revenues, expenditures, and other financing sources, and as well as other financing uses. How is budgetary accounts connected or integrated? Well, here we have, under the fund balance, the budgetary fund balance will be shown, and the budgetary accounts are also related or linked to the fund balance as well as the operating statement accounts. Notice here that for every item in the operating statement account, there is a corresponding budgetary account. So revenues in the operating statement is related or linked to the budgetary account's estimated revenues. Expenditures related to budgetary accounts appropriations. OFS, the other financing sources, related to estimated OFS in budgetary accounts, and other financing uses is related to the estimated other financing uses in budgetary accounts. So, the budgetary accounts have normal balances that are opposite of the corresponding operating statement accounts. Revenues would normally have what balance? Credit balance in the operating statement, right? The estimated revenues, you would notice, will have a debit balance. That's what that means. It has an opposite, all right? Opposite balance to the corresponding operating statement. All right, with the exception of encumbrances. Because you'll notice that these two extra accounts under budgetary accounts, encumbrances and encumbrances outstanding, do not have any corresponding account with the operating statement account. All right, so let's go deeper into this. So notice we are focusing now on the budgetary accounts, all right, and the relationship with operating accounts. All right, So the operating account revenues have a credit balance, and the corresponding budgetary account estimated revenues will have a debit balance. Notice OFS in operating account will also have credit because it's just like credit, it's just like revenue. Estimated OFS in the budgetary account will have a debit balance. Expenditures in your operating account will normally have debit, so the appropriations, the corresponding budgetary account for operating accounts expenditures will have a credit balance. OFU, so this is your other financing uses under operating, will be corresponding to estimated OFU, and it will have a credit balance under budgetary but debit under operating. What about encumbrances? With the exception of encumbrances, as what we stated earlier, the budgetary accounts have normal balances that are opposite of the corresponding operating statement accounts. So what about these encumbrances? Well, encumbrances corresponds to appropriations. And encumbrances will actually always have debit balance. So an encumbrance has a normal debit balance because it is a commitment to make an expenditure. And so it is kind of the contra account to the appropriations. So appropriations in the budgetary account has a credit balance. So the contra account to that, the encumbrances will have debit balance, the opposite. Okay. Now, it's important to know that because we will be using that in Learning Objective 5. So I'll reiterate that again when we go to Learning Objective 5. So for now, let's focus on Learning Objective 4. We'll understand how budgetary accounting enhances budgetary control over expenditures and revenues. GASB standard require that a budget to actual comparison schedule be provided for the general fund and for each major special revenue fund for which a budget is legally adopted. You would recall in topic 1 that we always have a separate column for general fund and each major fund. And the reported budgeted and actual results format of the statement of revenues, expenditures, and changes in fund balance is shown in illustration 3-5 of your textbook. All right. So the individual fund budgetary comparisons are required to be presented at the legal level of budgetary control. This represents the fund, program, or organizational unit at which expenditures may not exceed appropriations without formal budgetary amendment. You would recall that GASB does not want any specific funds to have a negative balance, right? Actual amounts in budgetary comparison should be presented using the government's budgetary basis, and this is based on either cash, accrual, or modified accrual accounting basis. So you will see from here, under the general fund, the original budget amounts, the final amount, and actual amounts. So the difference between the final amount, final budgeted amount, and the actual amounts will be shown in the variance column. So this is under general fund. For any major special revenue fund, you will do the same. You will show the original budget, the final budget, and the actual. And the difference between your final and actual will be shown in the variance column, and it will highlight whether there is any over or under budget. All right. Some other budgetary and operating account terminology that is important for you to grasp before we go into Learning Objective 5. All right. Appropriation. What's an appropriation? It's a legal authorization to expend cash or other financial resources for goods, services, and facilities that is to be used for a specified purpose, all right? And the amount must be specified as well, because if the appropriated amount, let's say, is $100,000, the amount should not exceed the 100,000 for that specific purpose. So now, once an amount, say that 100,000 is appropriated, what happens next? When the liabilities authorized by an appropriation have been incurred, so we have already acquired the goods or the services, and now we owe the supplier, then the appropriation will be expended. All right, so that means once the liability exists, the appropriation is considered spent or expended. Thus, the budgeted appropriation are sometimes called estimated expenditures. All right, so expenditures are expended appropriations. All right, now the terminology must be something that you have to add to your vocabulary: the appropriation, expense, expenditures, and the like. But there's one more terminology that I'd like to add here, because here we have kind of skipped one term, and that is encumbrance. You will notice when we turn to learning objective 5 after our break that once an account is appropriated, it needs to be encumbered, or encumbrance follows before expenditure, and expenditure before disbursement. So I'd like you to just think of encumbrance as something that happens in kind of in between appropriation and expenditure. All right, so we will stop for a moment and we will continue learning objective 5 in the next part B of this lecture.